So Bitcoin is generally just eating all the commodity ETFs. This is Bitcoin against the bond ETFs. What you can see here is, all the bonds are kind of slow, sleepy money, and Bitcoin is blowing past all of them, right? Do you want 4% return a year, or do you want 99%? There used to be a 60-40 bond portfolio, 60% equity, 40% bond. Now Bitcoin's creeping in to be 1 to 3% of those portfolios. It'll move to 5 to 10% of those portfolios. As it does, the price of Bitcoin is going to skyrocket. Bitcoin is transforming, and it's slurping out that long-term capital. So people go, well, what happens if it stops going up? It's like, well, what happens if water stops flowing downhill? What happens if time goes backwards? It's not going to happen.
Bitcoin is rapidly becoming the dominant asset class, outperforming traditional investments like bonds, gold, and even top equities. As Michael Saylor explains, its unique combination of high returns, low correlation with other assets, and mathematical scarcity is driving institutional adoption. With Bitcoin now comprising a growing percentage of portfolios, even small shifts in allocation are pushing its demand and price to unprecedented height. Saylor highlights that Bitcoin isn't just another investment, it's a fundamental transformation of capital. It offers a secure, decentralized store of value, free from the risks tied to traditional financial systems. As ETFs and global markets embrace Bitcoin, its utility as digital gold is attracting billions, making it the fastest-growing asset of the century. The rise of Bitcoin ETFs underscores this shift, with massive inflows and record-breaking launches like BlackRock's IBIT. Unlike traditional alternatives, Bitcoin's accessibility, portability, and finite supply make it an ideal asset for long-term wealth preservation. It's more than an asset, it's a global reimagining of value storage and financial independence.
Now, what happens when I put Bitcoin on my asset allocation chart here? Well, it just punches a hole in it, right? Like when I didn't put Bitcoin up there first because you wouldn't see anything else. Everything else is relatively uninteresting against 60%. What you see up there is there's an answer, and then there's a bunch of noise. There's a signal, and there's a bunch of noise. And if we look at it, that's 60% for 4 years. And when you look at it against this chart, this makes it much simpler. You have a bunch of money, lockdowns come along. In August of 2020, you can buy bonds, you can buy gold, you can buy real estate. All three of those don't beat the S&P index. They don't beat the hurdle rate. The conventional cost of capital is the S&P index. It's 13% every year for 4 years. Real estate, probably less volatile, but lower boost. Gold is only half as powerful. If you capitalize your entire bank on bonds, well, you end up with Silicon Valley Bank, right? Your bank goes bankrupt. Bonds are an awful investment. The Magnificent Seven, good idea. Buy the 7 greatest companies in the world. Okay, good idea. That doubles the S&P, right? You can outperform if you just buy the good ones. I've said oftentimes, I say, diversification is selling the winner to buy the losers. So when you're holding the S&P, you gave up the Magnificent Seven. You might as well just buy the top 7, throw away everything else. But the problem is, you're living with the top 7. And then Bitcoin. Bitcoin is, if you can't beat Bezos, Musk, and Zuckerberg, and if you're not going to actually buy those stocks, how do you outperform them? Well, Bitcoin is double. Bitcoin is 4 to 5 times better than the S&P index, right? It's a pretty compelling chart. You might say, well, it's just the last 4 years. But the truth is, Bitcoin's the best asset in 11 of the past 14 years. This has been the story for 15 years now. If you look at every other asset class, well, you've got one that's up 147% a year on average since 2011. The next best is 16, and everything else is just languishing, right? There's a signal there. It's screaming at you. It's not just the best performing asset, it's the best performing uncorrelated asset. If you go to conferences of high net worth individuals, the affluent, JP Morgan puts on one. It's called the Alternative Investments Conference. The idea is you're supposed to find an alternative thing to invest in, which isn't risk assets. You're not supposed to just buy a portfolio of equities. So find me something that will go up in value that isn't correlated to equities. This is what every endowment manager at Yale or Harvard is looking for. They're looking for assets they can buy that aren't correlated to the stock market. It might be timber rates, or it might be real estate. Real estate's the most common. It might be intellectual property rights, or, or some other random thing, a natural gas pipeline. Well, in this case, it turns out that Bitcoin is the uncorrelated asset, the greatest uncorrelated asset in the world, but you don't have to take my word for it. These are Fidelity's numbers. It's, you know, if you check it, it just has the weakest correlation, you know, very low correlation to the S&P, but also it's got the highest Sharpe ratio. So for the volatility you're taking, you're getting outsized performance. A year ago, the first ETFs were approved for Bitcoin, right? In January of 2024. BlackRock brought out one called IBIT. BlackRock is the largest money manager in the world. They have 1,101 ETFs. And the Bitcoin ETF went from dead last to number 13 in 12 months. Basically, in the first year, it skyrocketed above 99%, right to the top. And in fact, it didn't just go to the top. It turns out that IBIT is the most successful ETF launch in the history of Wall Street. In the last 40 years, the biggest innovation since Bitcoin, the biggest innovation, if you got to go back 40 years, is ETFs. This idea you can buy a package of the S&P index called SPY. And they've been around forever, and this Bitcoin spot ETF just blows past everything and scorches the earth. That's how much demand there was to invest in this asset. In fact, BlackRock's ETF outstripped its own gold ETF in the first year. Again, gold 5,000 years old, everybody knows what it is. Digital gold in the first year blows past. That's how fast it's moving. There are 20 ETFs, the top 20 ETFs we collated. Turns out 10 of them are all Bitcoin related in the last 12 months. So what you can see is that Wall Street is fascinated with Bitcoin-based ETFs, derivatives, anything that's related to Bitcoin is really changing the world. And those ETFs had not a nickel in them January 1st of 2020. Now they have $109 billion of AUM. And you can see this is becoming a major trend. But it's not just a trend in the US. These ETFs are popping up everywhere in the world. You can see these are the global ETFs. They're popping up in Hong Kong and Germany. They're popping up in South America and Brazil and Australia. Pretty much every major capital market has an ETF launching. Why? Because they make it possible to buy Bitcoin in 10 seconds on the phone. Also, because if you're China government, you want people to keep their Bitcoin in a bank regulated by a Chinese regulator. You don't want the capital to flow out of the country. And so these solve capital control issues, compliance issues, tax issues, convenience issues. And 6% of all the Bitcoin has just been slurped up by these ETFs. The people that are buying those, generally, they're just long-term holders. They're buying them for exposure. And so as they buy up this Bitcoin, they're taking it out of circulation, the price is being squeezed up. I was talking about alternative investments, right? Well, here's 60 global billionaires invested in Bitcoin. What is Bitcoin? Imagine Bitcoin is 100 rich families sit around and say, well, we like money, we don't trust banks, we don't trust governments, we don't trust any currency, we like to keep our money, but we don't trust each other. So they create a bank in cyberspace. They cap out the number of units at some number, we'll call it 21 million, and then all those families can buy into that bank, and since they don't trust each other, they all run a copy of the bank software. That's Bitcoin. Bitcoin is just a very elegant idea for how you get to keep your money, right? Rich people like their money, they want to keep their money, right? This is spreading. Those 60 billionaires, those are just the ones we know, not the ones that own it. I'm sure that a lot of people own it that aren't going to disclose it. But the point that I want to make here is that Bitcoin's the fastest growing alternative investment for high net worth individuals in the world. And, you know, if you think about it from first principles, it's by far the easiest. You know, it's not easy to buy buildings or buy, you know, Paul McCartney's music rights or buy natural gas pipelines. But you can buy $20 of Bitcoin, 200, 2,000, 20 million, 200 million, 2 billion, 20 billion. And it doesn't matter how much you buy. You have the same exact property rights, the same exact asset as everybody else.
Bitcoin is revolutionizing investment with its scarcity, decentralization, and high returns, making it a sought-after asset for portfolios seeking diversification and inflation resistance. Institutional interest and ETFs like BlackRock's IBIT are driving adoption, highlighting Bitcoin's role as a secure, digital store of value. With its portability, transparency, and fixed supply, Bitcoin is reshaping global finance and challenging traditional systems. Its growing popularity underscores a shift toward democratized, borderless wealth preservation in a digital economy.
Let's watch more clips from the interview.
Here's a snapshot of Bitcoin ETFs versus the commodity ETFs. What you can see, like we're looking at silver and gold and Bitcoin. So Bitcoin's the winner. Gold is the second best commodity. There really isn't a third, right? The rest are just trading vehicles. You're not going to actually hold any other commodity for any material period of time. This is all these are the largest ETFs in the world. And so it's ranked from the number one in assets, the SPY, all the way down. You see where IBIT is on this chart, from nothing crawled up on the board. But what you can also see is that with the performance of IBIT, it's pulling, and Bitcoin, they're pulling so much capital. They're going to slurp the capital out of all the other ETFs. And I don't think it's unreasonable to forecast that IBIT may very well grow to be the biggest ETF in the world within 10 years at the rate it's going right now. And the bad news for you is Bitcoin is beating your favorite hedge fund. These are the best hedge funds. We can find 4 hedge funds that could outperform the S&P in 2024. Most hedge funds underperform the S&P in 2024. But Bitcoin, of course, is crushing all of them. And the joke, of course, is, the bartender, the Uber driver, the aircraft mechanic, they're all buying Bitcoin, right? And they're totally crushing all of the masters of the universe with their PhDs in finance and all of their computers and their 18 screens and all their high-frequency trading, right? And it's a reckoning. Bitcoin is the new benchmark. What is it? Well, you have to go back to first principles to figure out what is Bitcoin. This is the great court at MIT, where I studied physics and thermodynamics and engineering. And everybody in the world knows Satoshi discovered a method to transfer value without a trusted intermediary. That's been repeated ad infinitum. It's repeated ad infinitum brainlessly by people that love Bitcoin, by people that hate Bitcoin, by people that want to criticize it, right? This is the thing. But they don't really think hard about what that means. Because if you can come up with a way to send value between two individuals without a trusted intermediary, you've come up with a way to store value without a trusted intermediary. So the profound idea is not I can send $1 billion from me to you without a bank in the middle. The profound idea is I can put $1 billion in cyberspace for all of eternity without a bank in the middle. That is to say, we put money in orbit. The difference between putting something in orbit and then putting in a ballistic trajectory is the ballistic trajectory comes back to Earth. The thing in orbit orbits for 1 billion years. You put it up into a fast enough escape trajectory, maybe it orbits the solar system or the sun, maybe it escapes the solar system. Putting something in orbit is profound. Putting money in cyberspace, storing value in a network that doesn't rely on a government, a company, a computer, a counterparty, that's the profound idea. Bitcoin, Satoshi discovered something which is profound. It's digital energy. It's the conservation of energy in cyberspace. It's the first digital thing that you can't copy. You can copy everything else. It represents the transformation of capital, our capital, from finance and physical assets to digital. It is the digital transformation of everything that we think is valuable in this world. And here's a chart of it. Global wealth, $900 trillion. People own things they think are valuable, bonds and currencies and equities and real estate and art and gold. But if you look at that chart and you think about it a bit, you realize that half of those assets are held for the utility value. When you have a car or a plane because you want to fly in it or drive it, it's useful. When you have a building because you need to work in it or manufacture in it, it's useful. But when you just buy something because you need to park your money there, it's long-term capital, it's store of value. It's the rich dude that has 10 houses but lives in one, right? They're just land banking, right? When you buy the bar of gold, it's the rich family that has 87 Picassos in a vault under a mountain in Switzerland. They didn't buy them to look at them. They're just parking their money there. So I'm going to call that long-term capital. That's half of everything, right? When you're a company with bonds on the balance sheet, you're just parking your capital there, right? And so you can see with currencies, with bonds, it's pretty obvious. But a lot of people buy real estate and a lot of people buy stocks because they just have to buy something. They're just putting their money there. Now here's the problem. That $450 trillion parked in financial assets and physical assets is struggling against entropy, against chaos, against inflation, against competition, against the passage of time, right? Your capital is being destroyed all the time. How big a problem is this to the world? It's a $10 trillion problem, okay? $450 trillion decaying at 3% a year. It's $13 trillion, right? It's a lot of money, and it is the gradual but progressive and certain decay of your capital assets because you have them in short-lived storage containers. Bitcoin is an asset without the financial risk of your currency, your stock, or your bond, and it doesn't have the physical risk of the real estate or your Picasso or whatever concrete thing that you want to hold. And so now when you come back and look at that long-term capital and you think about smart people, you say, well, I'm a smart person. I'm a Russian. I have a bunch of real estate in Siberia. Oops, maybe I'll buy some Bitcoin. I'm a Chinese, wealthy person, but I want to leave China at some point. I can only take $50,000 of cash with me. Maybe I'll buy some Bitcoin. I've got a bunch of warehouses. They're rusting in South America. Maybe I'll buy some Bitcoin. I'm worried about the government toppling in my local African country. I'll buy some Bitcoin. I just buy some Bitcoin. I believe in tech. I buy Bitcoin. Bitcoin is transforming and it's slurping out that long-term capital.
Bitcoin is revolutionizing finance with its decentralized, scarce, and inflation-resistant nature, becoming a vital asset for diversified portfolios. Its rising adoption by institutions and the introduction of Bitcoin ETFs highlight its transition into mainstream finance. As the digital economy grows, Bitcoin's transparency and independence from traditional systems offer unique appeal. This shift empowers individuals globally, fostering a secure and borderless economy. As Bitcoin gains momentum, its influence on traditional finance deepens, shaping the future of monetary systems. Can Bitcoin eventually replace traditional financial systems entirely? Why or why not? What obstacles must Bitcoin overcome for widespread acceptance? Let me know in the comments.